Hi, I can see some familiar faces and some new faces, which are great. My name's Mel. I work for Big Society Capital, and I'm going to be the host for this afternoon's Let's Talk Good Finance, which is around hubs, clubs, and hubs. I'm sure I'm going to mix that up at some point this afternoon and trip over those words, aren't I? We've got around just over 30 people, I think, or 35 people registered. We've got 27 in the room. I think we're still waiting for two speakers. I know we've got one speaker that's coming a little bit later. But just starting off, if I can, just do some general housekeeping. If at all possible, you can put your name and your organisation in the title on the screen. That just really helps, mainly so that I don't have to try and remember who everybody is. But also, if you want to introduce yourself in the chat, just to say who you are, where you're from, or if you've got a particular interest in attending today, that would also be great. That helps me when we come to questions later on. That's really helpful. Let's Talk Good Finance. I'm going to tell you a little bit about the format of the day. Is our events which are designed to try and help social enterprise and charities, social purpose organisations, to find out more about what social investment is and isn't, to try and give you some practical examples, and also, most importantly, for you to hear from peers. So we have 3 peer speakers today. We're going to hear from Stephen Richards, who's the Chair and Treasurer of Hill Street Youth and Community Centre. We're going to hear from Sam Cook, who's the Creative Director and CEO at Tameside Arts. And we're also going to hear from Mark Dufferland, who's the Chair of Water Rally Community Pub and Restaurant. So the aim of today is to talk about community assets and the way that the services might be delivered and how that asset might be held, and the different ways that investment can be used. So I'm hoping that, as is normal with these events, you're all going to be a great audience, save my voice and get lots of questions ready for when we come to the Q&A session, because this is very much your time. And I'm going to try and do a little bit of a skip through what social investment is in terms of introduction, but try and take as much time, give as much time for the peer speakers as possible. So if you have just joined us and didn't hear me originally, if you can make sure your name and if you have an organisation is in the title on the screen, that would be great. If you want to introduce yourself in the chat, which I can see some people have already been doing that, that's really helpful. Let's people know who's here. And if you've got any particular organisation, okay, oh, Mark's on the call apparently, so I can see Mark. Oh, Mark, I can see. Oh, I can see your Penelope on my screen. There we are. Just, now I've worked it out now. Yeah. No problem. So we've got you here. That's great. Okay. And I can see we've got a range of different organisations. Before I start, I said introduce yourself in the chat, but I just thought I would put this out there to the audience. Would anybody like to just come off mute and just give us a one-liner on what they've come for today? Is there something in particular that you're interested in finding out, or what makes this relevant to you? Anybody want to come off mute and just tell me? Yeah, Moisin, is that right? Have I got that right?
Absolutely, yeah. We're a social enterprise and also have a charitable arm as well to help reduce homelessness and help ex-offending rates through housing and intervention. So one of the things we're looking at is urban hydroponic vertical farming. Okay. Right. In towns and cities for many, many wonderful reasons. I think if I start to tell you why, will be the end of the session. Okay. Honestly, lots of great reasons, climate, and all of that. So I just want to understand, is it debt, is it equity, is it soft loans, is it hard loans? I'm very curious. Okay, good. Curiosity is good. All of those things, and we'll try and get to those. And we'll also make sure that we post a really great case study for you, which isn't in the pack today, from Farm Urban. So they are an organisation that do exactly what you're talking about and have taken investment. So make sure we post that one for you. Anybody else want to just come up? Why have they come to today's event? Karina, I can see you wiggling your hand at me.
Hello, lovely to see you, Mel, and lovely to meet you all. I recently started as community builder for the Community Alliance, which is basically a former CVS, so Community Voluntary Service umbrella support organization. And in my new role, I am as community builder, I'm all about building the capacity for the third sector. So I'm just here today to network with you, to learn, and hopefully to pass my learning on to the third sector in the areas that we're working, so that they stay stronger and can do more good.
Lovely, thank you, Karina. That's great. So yes, we one of the aims, and we've worked with Karina on a few things, and I know there's a couple of other Amelia's here from Voluntary Norfolk, I can see as well on the panel. We've got Hannah from Locality, and a couple of people from Plunkett Foundation. So this is organisations where people often go for advice and support, and we want to make sure that people understand about repayable finance in the same way as they do about grants. So hopefully we can do a little bit more about that. Oh, it's a community centre as well, so goodness. Oh yes, right, so lots more there, right. And we've got several investors as well, who will obviously be people who will be looking to make investment and are probably supporting some of the case study speakers today. So shall we crack on, and let's start with our first Mentimeter. Hopefully some of you will have used this tool before. If you haven't, don't worry. It helps if you've got another screen like your phone or something to be able to access it. And it's like an online polling. Olivia will post into the chat. Oh, sorry, I've already posted into the chat a link for you to click and to go directly there. So this should take you straight there. We'll be able to see when we share the screen in a moment how many people we've actually got logged in. And this asks you to rate your understanding of social investment at this moment in time. Where would you put yourself? Okay, on this scale of between 1 and 10. We're not expecting lots of experts. I definitely wouldn't consider myself to be an expert, even having worked in the sector for nearly 8 years now. I'm learning every day, but it's just a good way to give us a starting benchmark of where we are as a collective group. So it works as an average. We've got 8 people logged in at the moment, so I'll give it a little bit of time. If anybody is struggling to access the Menti link or struggling with the technology, please do shout, and we will try and facilitate that. It just takes a little bit of time. We seem to be hovering around the sort of 5 out of 10 mark somewhere here. We might move up a little bit, or down a little bit. 13. We've got 29 people on the call, so I'll probably try and get it up to northwards of 20 to give us a fair representation of people in the room. I think we're going to stay somewhere around the 5 out of 10 mark. It's moving slightly. We're up to 16. Try and get 4 more through if we can. Anybody else able to join? 17. We're nearly there. I don't think we'll probably get the 29, but it's you can still carry on inputting to this. Okay. And the question that I asked you before, get ready for this one, of what you hope to gain from this afternoon's session. We're going to have an opportunity for more people to contribute to that in a moment. So just giving you advance notice that we get to that. So we're about 18, we're about 5.6. Around about between 4.5 and 5.5 is average for this type of session. So basically we have people who know some stuff. We've got some people who know more than others. That's always the way of the world. And hopefully by the end of today's session, we can try and at least push that along the axis a little way. We'll definitely come back to that. Okay, so what are you hoping to gain from today's session? Just give me a couple of words, please, half a sentence or so. You might want to just build on some of the things that we've already chatted about in the introductory session. You know, are you looking for something specific because there is a particular project or an enterprising activity you're actually looking to take on or to fund? Are you looking to gain information to share with others? Are you looking for potential people to invest in? Or are you looking from a policy perspective? Really just keen to understand what your interest is this afternoon. And also it really helps for me to be able to do more signposting. So, oh, I like that one. Understand the needs of investees. That's good. It's definitely not all a one-way street. Real life case studies. Yes, that's perfect. I often say this. I think I say it in pretty much every Let's Talk Good Finance that I've run, and I think we've run well over 60 now in my time at Big Society Capital. I always ask people why they've come to this sort of thing. And I remember an attendee at one of the very early ones of these I ran in Nottingham, and the lady said, "I've come to find out what social investors won't tell me." So I think what that really means is there's something very authentic about hearing it from a peer perspective, where it's not in their professional capacity, and sharing the sort of warts and all journey, and something Stephen and I were talking about in the sort of when we were introduced, is just working out what's good, what's perhaps unexpected. Lots of discussion locally about using empty retailers for community purposes. So social finance might be a useful funding option. That's interesting. Guidance and stories for community organisations. I noticed that we've got a few of our colleagues from the National and Community Lottery Fund and also from Sport England, and often organisations like that, as well as perhaps having some social investment as well, do an awful lot of signposting, and sometimes maybe grant isn't the only option or answer. Better understanding of the options around financing for specific projects as well. Okay, so we'll definitely have a look at that. And inspiring examples of small organisations accessing social investment for community benefit. I love that one, because I want to bust the myth this afternoon that social investment is only for big organisations who are looking to scale. Can be, but it's definitely not just all of them. Okay, great. So I'm going to just share with you some slides now, and just give a really brief overview as to what social investment is and isn't. He was going to share the slides for me. That's brilliant. Thank you very much. Right. So that's yeah, there we are. Lovely. Thank you very much. Just skip on for me, Olivia. That would be great. Okay. So let's talk about the role of social investment. I always say there is good news and bad news. So the good news is that social investment works wherever you are in the country. So whether you're in the Highlands and Islands of Scotland or in the lowlands of Cornwall, social investment isn't necessarily tagged to one particular geographic location. And social investment is the use of repayable finance to help an organisation achieve a social purpose. So if you like, the elephant in the room that I always like to address is that social investment is most usually money that you have to pay back with interest. And what I'm hoping to do this afternoon is to give you a better understanding of where that fits perhaps alongside grant and other forms of income. Okay, so a little bit about the history, the social investment history of 101. Sort of all comes following the financial crisis of 2008, 2011. And I suppose where this really gets to, and this is definitely my journey into social enterprise and into social investment, is that there is always going to be a need and a role for grant to help the social sector to do and create the impact. However, it's probably fair to say, and probably even more relevant in today's economy, that there will never be enough grant to do all of the things, create all of the impact that is required. And therefore, repayable finance or social investment is another way that we can support the creation of impact. So I'm going to just skip on to the next one for me as well, please. Okay, so the easiest way for me to explain to you how does social investment work, and it says here that charities and social enterprise may generate a surplus. I don't like the word surplus. I'm quite happy with profit. I think it basically does. It's just another way of saying it's what we do with the money that we make at the end that matters and makes us different. And the way that we might do that is through being enterprising. So through trading activities, through contracts, grants, or donation, and usually a combination of all or some of these. So it's quite usual for social enterprise and charities to have a mixed economy of income. And then if you're able to do that and generate income with a profit or surplus, then potentially there might be a way that you can use social investment to scale, grow, or develop some of your activities. And we often talk about the analogy of a toolbox, so I'm going to come back to that. I'm going to show you a really short video because this probably is going to do it even better than I can possibly do it, and certainly shorter. I think this is 1 minute and 34 seconds. So hopefully this will outline what social investment is.
Across the UK, charities and social enterprises like yours are tackling some of society's biggest problems. Maybe you've set up a coffee business to give people the skills to get back into work, or are running a nursery and using the profits to support local parents. Whatever your mission, you'll need money to help with cash flow, to grow your organisation, or to buy an asset like a new building. You might even need finance to kick-start your new venture. And that money could come from traditional grants or donations, or as a loan from your local bank. One option is to get that money from a social investor. That social investor could be an organisation or an individual, and you can borrow their money or offer them shares in your organisation. But what makes a social investor different? Well, they don't just want to see a return on their investment. They want to see their money being used for good, helping you to keep delivering your social mission. Sound good? To see if it's right for you, check out goodfinance.org.uk.
Oh, lovely. Thank you, Olivia. So I said that I would revisit this toolbox or toolkit analogy, didn't I? So we often refer to social investment as is sitting alongside donations and grants as another tool that you can use. And we usually split this down into the following ways: so to potentially help you to buy an asset, to deliver a contract, which might be because you need to cash flow or have some investment upfront, to kickstart your organisation. Now, notice I didn't say start your organisation, so I'll come back to that one. To grow your work or to develop new innovations. So arrange those are the sort of key headlines under which you might perhaps categorise the reason for wanting to borrow money. I said I'd come back to kickstart your organisation. It isn't that you can't get investment to start your organisation. In fact, many organisations may be able to do that through things like match trading or through grants and enterprise support from people like Unlimited, raising crowdfunding or community shares, which we're going to hear a little bit more about. But it is definitely the most challenging type of investment. So it's often that grant is a way to pilot or to test whether whether the service or product that you're aiming to sell is required by a customer, and then you can build on that to take investment. So it's not that you definitely can't, but it's definitely more challenging. If I've got another little picture somewhere, and you can see that in terms of the types of capital that's available, money for startup is definitely one of the more challenging areas. And of course, you might use a combination of those different types of things, or be trying to do more than one thing. So key considerations if you're looking to take investment. Okay, so starting the thing that has to happen is you have to be enterprising and have a source of income generation that makes a profit or a surplus, whether that is selling something to an external customer that is business to business, business to customer, or whether it's to a local authority in a contract. You need to think about what you need it for. And we went over some of those, some of the things that you might list those for in the previous slide. We need you to think about where the repayment is going to come from. So which of the different income streams would you be able to get the money to repay taking on an investment? And lastly, you have to think about what social impact you will create. This is an interesting one. So I think if I was to go back about 5 or 6, 7 years, I used to go to a lot of conferences where everybody would come up and tell me they had the tool that would tell there'd be the answer to the question about what impact is created. And so I'm going to share just 2 things with you about impact that I've learned over time, is that there is no numbers without stories and no stories without numbers. You don't have to have a 20-page glossy report. You might have, but you don't have to have. And you need to be able to bring whatever you measure to life. And the other thing is that it should be proportionate and relevant. So if you're a small organisation, then you need to think about what things should you measure, what matters to you. And I would always suggest that you start somewhere. Probably one of the reasons that the outcomes matrix which is a profiling tool that's available on Good Finance. It's one of the most popular resources. It's had over 96,000 downloads since the 6 years that it was launched. Oh, and a nice little fact on the bottom of here, just to remember, because I sometimes get asked the question about, is people lending you money just making a profit out of other social enterprises and charities? You have to remember that 85% of social investors are social enterprises or charities themselves. And so they also have a social purpose at the very heart of their mission. Okay, so we had this question, I think it was Mohin said, I want to know what it is. Well, very simplistically, there are two different types of lending, so debt and equity, okay? So debt is a loan, effectively, where you borrow money, you pay it back over a period of time with interest. Usually, average debt lending period will be somewhere 3 to 7 years, so relatively short term. And then equity, this is when an organisation sells shares to an investor. So I suppose the easiest way to do that is to talk about something like Dragon's Den, where they say, oh, I'll give you X amount of money for X amount of shares. Now, the challenge with equity for social enterprises and charities is that many of us don't have governance structures that have shares, so we're not actually able to do that. So the two other terms that you might hear bandied around at time are blended finance, and that's where you get part grant and part loan, and it's put together in a product, or quasi, sometimes referred to as crazy equity, or revenue participation. That's something that mimics equity for organisations who don't have shares, and we can talk more about that and provide more information. There are also two other ways, two main sources of where you might get investment from. So you might get it from an organisation, so that would be people like specialist social investment intermediaries or firms, social banks, or trusts and foundations who also make social investment, or you might get it from an individual, so crowdfunding, community shares. Unfortunately, social investment tax relief just lapsed 2 weeks ago. There are other tax reliefs that we could talk about, or angel investors. So who are the funders? Actually, we've got some of them on the call, so I'm sure at some stage they'll introduce themselves. But I often use this arrow along the bottom. Think about it like a monopoly board. So if at the very left-hand side, you need to think about when you're borrowing money, it's quite important to understand where does the money come from? So not who you're borrowing it from, but where does their money come from? And so you might at the very left-hand side have organisations who are lending money, the source of their money is philanthropic, so they don't have to repay it to somebody. An example of that would be somebody like trusts and foundations, perhaps, who also make grants. But also people like maybe CAF Venturesome, where their money is philanthropic at source, and therefore they might be able to take slightly more risk. And you then might have people like social banks, people like Charity Bank, who actually are investing other charities and social enterprise deposits, and therefore might be able to take slightly less risk. So I think one of the things that's quite important, particularly when we start talking about why money costs, what it costs to borrow, is to understand where the money you're borrowing comes from, and therefore that should give you some indication of risk. There are a range of different and additional support. I'm going to come back to this because I think we'll talk about a lot of these afterwards. Good Finance provides a lot of resources and tools. There's also a range of other support programs, which I'll come back to and talk about those later. Okay, that's a whistle-stop tour, but hopefully you now know what social investment is. So it's money you have to pay back with interest. Hopefully you have an understanding of the two key types of investment, so debt and equity, that you can borrow it from individuals or organisations. And if you are considering borrowing money, it's quite useful to be able to think about what do you need that money for? So is it buying an asset? Is it cash flowing a contract? Is it to scale or to develop a new product or service? Because that's the type of what you're going to do with the money definitely helps you to decide what type of investor that you might need to speak to. Probably another myth to bust is that all social investors do the same type of lending, and they don't. So on Good Finance, you can find over 70 different funds listed, and they all have slightly different parameters. That's why the search and the filter function really helps. So let's hope that that's given you a little bit of groundwork and knowledge. And there's quite a lot of things that we've covered, and some of the things you talked about in the introductory section we're going to come back to. But I want to move on, as I said I would, because I know the bit that you're most interested to hear is not me whittling on about what social investment is, but you want to hear from the peers. And I think we're going to start off with Stephen Richards, who's the chair and treasurer of Hill Street Youth and Community Centre, and who took on a charity bank loan. So Stephen, you're going to tell us a bit about your organisation, what you do, and how you used investment.
Yes, good afternoon to everybody. As you can see, we are a youth and community centre. I think our journey started a long time ago, and I'll go through it briefly, but I think 3 words summed it up. It was having a passion, having persistence, and having patience. And I think our experience was that dealing with lawyers and county council tested our persistence and patience to the extremes. Very hard work. How it started was in 2011, the county council decided they were going to close the community centre, which is also the youth hub for Warwickshire. I think they saw the site, which was in the centre of Rugby Town, as being quite a valuable investment development. And at that time, back in 2011, they were strapped for cash. What they didn't understand was how the community felt about the centre. And there was a lot of resistance from the public. There were public meetings called where people attended, a lot of bad press. And in the end, the county council decided they'll allow us to make a bid to run the centre. We all thought they were hoping that we would fail so the county council could take it back and sell it, but we didn't. The journey was quite difficult. We started in 2011 when they said they were going to close it. We formed a charity. We got some good trustees on board. We built a business plan. We put in a bid to the county council to take over the running of the centre. And we negotiated a lease, which turned out to be rent-free for 27 years, going through to 2039 from when we started in 2012, which was a really good deal. The community centre is different because it is a very large hub. We've got a lot of space. We've got parking for 25 cars. We've got a sports hall, a recording studio, an IT suite, a dance studio, a cafe. So it's not a small little business. And I think we didn't anticipate what the struggle would be to get it up and running, but we did. The centre built up, and prior to the dreaded COVID coming along, we were getting up to 40,000 people visiting a year. And we got about 40 user groups. These were local charities and community groups who needed a base to work from and meet and involve themselves in community activities. For example, at the moment, we've got adult and community learning who are there 5 days a week. We are hosting up to 70 Ukrainian refugees a week. And we were a warm hub during the winter months by getting some money in to run that. The Ukrainians are so passionate about what they're doing, they've actually formed themselves into a charity, and they're applying for grants to continue the work which was initially funded by the Borough Council. So much so they've announced they want to hire the whole of the centre for the Eurovision Song Contest. So that should be amusing. We raise funds to organise commission services. By that we mean we deliver a range of services, mostly to young people. And these services are all free of charge to all the users. We think that's a very important USP because often the people you're dealing with are from the poorer side of the community. And they haven't got the money to spend, so they will come and everything is free. We get funding for that activity from people like Children in Need. The Police and Crime Commission has given us funding for about 7 years now, every year, because we're working with people who are on the edge of criminality, who need to be helped get back into life. A lot of the young people are socially excluded, particularly during the lockdown period. And they are really struggling, and so we're there to try and help them get back, get jobs, improve their education because they may be excluded from schools. So quite a challenging environment. We get no funding from the government or from the borough, although we do get some funding from our local county councillors. I don't know where you are, if you've got borough councillors or county councillors, but in our area, each of them gets £7,500 a year to spend on local projects in their area. And every year we apply for it, and every year we get funding from them, which is a very good route. The demand for the services and space as well gradually increased, and we couldn't cope with providing the space that was needed, particularly because of social safeguarding. We couldn't have young people and adults in the building at the same time. And so that actually precluded us hiring space out when local groups needed it. We're also, signposting people. And so again, if people come in, you've got to have space to actually sit on a one-to-one with them, help their problems, and signpost them to the right people that can help them. So it was decided that to enhance the safeguarding, we should build a dedicated youth hub where all the services to young people could be focused in the one building, and adults could then be the rest of the community centre. We thought that was quite good. We've got a full-size sports hall. We thought, right, we will actually split it in half and we'll build a 2-storey youth hub in the sports hall, not realising that there was asbestos, there's foundation issues, and also if we're building it inside, we'd lose £120,000 of VAT on the construction, which we couldn't recover. So we then decided we'll take up space of the car park at the front of the building and build there. We then found out that if we wanted to finance that, which is going to be about £650,000, the lenders wouldn't originally view us very favourably because we didn't own the building. We leased it, paid no rent, but we didn't own it, and they wanted long-term security. So we decided we'd therefore have to buy the freehold off the county council, which we thought was easy. I think Ian, my colleague, is online as well, will find that we went through a very rusty time with them. We started in May 2019, and one of the property department from the county council came to visit us. He was extremely helpful. He pointed us in the direction of some cabinet papers, which was the protocol for disposal of surplus property and transfer of public assets to community groups on the basis of social value to the community. And he said that these can often be at nil cost. And in our particular case, because there was a rent-free lease, so they've got responsibility but no income until 2039, they'd bite your hand off for it. Unfortunately, he left, and the people that took over said, oh no, he didn't. We've got no record of him attending a meeting with you. We've got no record of any minutes from that meeting where he made that claim. And the officers of the county council don't agree, even though the cabinet had agreed. So we got into a big argument. And even though the protocol that was approved by the cabinet actually physically named our community centre as one of the beneficiaries, it didn't matter. So very, very frustrating. We therefore started the purchase route. What we didn't understand was that when we got through about 2 years, we're in 2021, we started to look at moving on to the legals to complete the purchase. And we found out that the county council, actually, the site was 7 different freehold properties, 3 of which were houses dating back to the 1800s, which had been demolished. And the county council have never consolidated it into one package of freehold, which made it very complicated. Particularly as one of those, they didn't actually have any evidence that they owned one of those packages. And they claimed they'd got possessionary title, which meant that somebody could come along at any time in the future and say, no, that's my bit of land, we want it back. Therefore, that proved very difficult in trying to buy the property and trying to find finance for it. They eventually took out an insurance policy against anybody coming along in the future and doing that. But the fact was that the market price of the site was actually about £450,000. And we argued that because it was rent-free for 2039, any money in their bank would be better than nothing. So we agreed a price of £135,000. So we got quite a good deal there, even though they didn't give it to us for free. Lawyers got involved, and that became very, very difficult. From the county council side, we've got huge resources of legal people in their legal department, and we were quite novice, but we were guided and we actually came through it. But then we thought, right, how are we going to finance the purchase of it? We can't get a grant, so we're going to have to buy it. So I approached our bankers who'd been with since 2012 and put the proposition to them. And as soon as they found out that the land was actually 7 packages of land, it was too difficult for them, and they didn't return my call. I rang again, and again, no response. They just weren't interested in anything that's out of the ordinary, which is, I think, fairly typical quite often of high street banks. But I then did some research, and I came up with the charity bank. And they seemed to be, I hadn't heard the charity bank before. We had no contact or approach from them. And I contacted somebody called Danny there. And Danny came to our rescue a bit like a knight in shining armor and sorted out everybody and everything. Nothing was too difficult. They understood the way around the problems. They accepted there were 7 packages of land. And we said, well, once we own it, we'll try and get it consolidated into one package to make it simpler. But there had to be a title mortgage charge with 7 pieces of land, even though it's just one site. The county then came up with another wobbly where they said, okay, we're giving it you a discounted price of 135,000. What's to stop you selling it, making a huge profit and running away? We want something called an overage deed. Now, never heard of that. It took a lot of research, a lot of legalistic words. Basically, it was saying that if we sold the property or we stopped doing what we were doing and did something different, then the county for 10 years would be entitled to come back for 50% of the uplift of the price between what we paid and what it was sold for, with a restriction on the upper limit. And again, banks don't like that. The charity bank worked with their lawyers and they came up and said, with slight modification of the wording, we can accept that. So that was ticked off. So fantastic. So in the end, we negotiated with a charity bank for a 25-year loan, mortgage loan, for 125,000. They said, right, you've got 2 options. You can either take a variable rate. Now, at this time, the variable rate, bank rate was 0.25%. And that was very attractive. Or they said you could have a fixed rate, which would be 5%. We thought long and hard and debated about it. And we said, well, what we want is security of our repayments over a period of time. And we're not there to take risks. Our cash flow would build in what the repayments would be, and we could cope with that. As it turns out, with the way things went since 2022, when we bought the property, fixed rate was certainly the route to go. So that was a good decision, but you had to think hard about what was the best for the charity in the long run, short-term gain or long-term cost. The other area was that we'd got money on deposit with our high street bankers, and they're paying us a princely sum of 0.01% interest on our investment. And this was monies that have been raised through grants, etc. And the charity bank offered us an ethical bank deposit account, which paid a much higher rate of interest. So we moved our money to them. So again, that was another thing that we hadn't thought about until we talked to the charity bank. The key to this was working with the charity bank unlocked us the ability to build the dedicated youth hub, which was going to be a huge benefit to the local community. The charity bank also introduced us to the Access Reach and sponsored us for that, and we got a grant of 7,500 towards the costs of setting up the grant, the new building, the youth hub, which so far has cost us £35,000 in fees, so it's a huge outlay. They also suggested that we could get in touch with the Social Enterprise Support Fund to provide funding for a youth worker. Unfortunately, that fund was oversubscribed, so we didn't actually get that one, but we are still working on finding grants for those sort of areas. I think I'm a bit disappointed with the charity bank, or they will be disappointed with us, because they said if you actually are short of the finance you need, which is going to be about £600,000, we'll consider giving you an extension to your mortgage. Unfortunately, we're so successful because of our passion, our persistence. We actually raised the £600,000 very easily. The lottery provided 250,000. That was a struggle getting that finance through. Their processes are so slow. Their legal department is slow. It's very hard work. Another funder said, all we did was fill in, I think it was a one-page application in the background. They then called us for a shortfall of 5 potential grant holders, and we got accepted, and they gave us £250,000, and they said, we'll just send you £50,000 each month while the building's going on. That easy. And then we got some funding from the Heart of England, and we got some funding from Cadbury. So we actually managed to fully fund the project. And so the project started in February, and we're aiming for completion about July. They're about up to roof height now. And this is going to be a huge benefit to the local community. So our experience of working with the charity bank has been extremely positive, and can't thank them enough for having got us there, because if we hadn't, then the community of Rugby would have suffered quite a lot. So what has the benefit been of the community owning the asset of where we are? It gives us long-term security. It takes away the threat that the county council could always turn around sometime and say, we want you out, we want to sell it, we want to build flats, offices, shops, whatever. So it's taken away that risk, and it's provided it for the community. It's made us able to invest, to take the risk of investing, to make it into a modern, welcoming place, rather than it being owned by the county council. We own it, we want it to look the right place where people come and feel they're part of it, they look after it. The cases of vandalism we have now that we own it is amazing. You know, people respect the place, they look after it. It's also in providing a safe haven where people come because they know they can get help and get signposted to other organisations. The door is always open to come in, have a cup of tea and chat to our workers here. And that again is a need that is growing, because the problems with the community at the moment and mental health with young people are huge. We are able, because we are flexible, to offer a speedy response to needs. So if we find there's a need in the community, the trustees can act very quickly in raising money. Again, that comes back to the passion, because in raising grants, if you've got a passion, it comes over. To be honest, we're not great believers in using outside sources to raise money, you know, employing fundraisers. We feel we know the story, we've been there for 10 years, we can put it over with a passion, and people seem to understand that and say, here's the money. So we've been very successful in that area, and we are always looking to increase the services that we can provide to the community, and to take on more community groups as well as get a base for them to use. And it enhances our focus on young people who, as I say, have mental health issues, crime issues, and are excluded from education. So it's, and owning the property has given us that confidence to move forward and invest more into the local community with their support. So that's our story as to where we are now.
Lovely, fantastic, Stephen. Thank you very much. I'm not that many miles away from Rugby, so I'd definitely have to come and have a cup of tea at some stage.
Oh, please do.
We'll
be opening the new centre Youth Hub in July. So
right, there we go. There we are. I shall wait for the new bit to be done, and then I shall come along and have a see it. I mean, thank you so much for sharing your story. I think what was really interesting about your story particularly is that people often think about, when we talk about buying an asset, so we talk about a community hub, which is essentially what your facility is, we often think about like the initial purchase. Well, what's quite interesting in your story is you already to some extent had the asset or had access to the asset, and so therefore your mortgage type, the longer term secured lending, was actually to secure that building and to take on the freehold. And so that's quite not unique but different. Probably the thing that that you said that's going to really stick with me is about passion, persistence and patience. I think you must have had that in spades from some of the things that you talked about, particularly when it gets to legals. but probably the thing I'm going to always remember, and I'm sure this is going to come up at some point when I get to talk to Danny, is that thought of a social investor coming in, like, you know, with their cape flying behind them. I don't think I've ever had to compare a social investor to a superhero, but it seems in this case that Danny pulled out all the stops, which is really good. There are a few other things that you talked about, but I'm going to come back to those, particularly around what makes a social investor social. So we'll definitely do that. Thanks for sharing your story so far, Stephen. Stay there if you can, because I know we'll have some questions from the audience, but we're going to move straight on. And we're going to welcome Sam, who's joined us, and she's going to tell you a little bit about Tameside Arts and the who you are, what you do, and how you've used investment.
Hi, can you hear me? Hi, it's lovely to see you all. Nice to meet you all. Okay, so let's cut to the chase. I'm Sam. Set up Tameside Arts Limited in 2005. We have steadily grown over the years. Originally just starting with myself part-time, a few hours a week. We've now built up where we've got 14 staff that manage the organisation and provide activities, mainly for people with support needs, additional needs. But pre-COVID, we were all ready to launch the project further and be a lot more inclusive and provide activities for the general community. So we had lots of amazing plans, and then COVID hit. So we're at that stage now where we're starting that process again. Our customers are mainly adults and children with support needs at the moment. We are paid. I'm going through the question bit first, and then I'm going to take you on a tour, show you around, so then you can see what we actually do. We are contracted from local authority to provide day service provision, and we're contracted from children's statutory services to provide one-to-one support for holiday clubs, activity clubs, weekend clubs. So that's our main bread and butter. And obviously, as with all our organisations, we rely on funding. So we've just spent a 3-year lottery grant. Now the lottery were amazing with us. We were granted the fund, but literally the week before COVID hit, and it was to recruit a promotional worker and a centre manager. Obviously, had nothing to manage, because we had to go into small balls and to our client. So the lottery were great and said you can use that funding however you need to survive. So that was amazing. That money's just come to an end now, so we're currently in the process of reapplying for continuation funding to expand. So we have private clients as well that have got a direct payment in place, and other clients that are sub-threshold or limited support needs that pay like a fiver to come to a session. So that's what we're looking at expanding now and getting more people through the doors. Funding wise, more recently we were granted the Together Fund, quite a small amount of money, just 4k, and that's to provide movement through music and the arts, racquetball and drumming. And Know Your Neighbourhood Lottery Community Fund of 40k, which is to recruit volunteers, train them within the centre, and then support them to move on to other aspects. Over the last couple of years, we've been successful in various bids. The largest was again through Key Fund, which I'm going to go on to. They're our social investor. So we got 80k during COVID just to help us get through and survive. We're currently process, obviously applying for lottery and another bid that we will get. Oh yes, we will. I would say that things are looking a bit difficult for us at the moment. The local authority, obviously due to social care and health major cuts, are limiting the amount of people that will be referred into our service. They're also being a bit ropey about getting people on a direct payment. And we advocate on people's behalf that it's their right to get a direct payment. But reviews that we're attending at the moment with social workers are openly saying it might not be possible. We've got to look at budget cuts. So it's a tricky time at the moment in Tameside for the voluntary sector. So if I just explain, we took the day service contract on about 9-10 years ago, directly commissioned by Tameside Council. And things have gone great. We've been able to up our numbers. We've been able to adapt the service to suit that individual's needs. So rather than people fitting in boxes, we've, taken them out of the boxes and given them the support that will help them to develop and progress in their lives. However, Tameside Council have now gone right back and said, no, it needs to be a service 10 till 3, Monday to Friday, needs to be centre-based, and it needs to be shared support. So that choice and control, it's just insane. So that's where we're currently at the moment. We're fighting with commissioners that don't really understand what the people that they're paid to support want in their lives. So yeah, but we're always fighting. My personal background is I was an advocate prior to opening up Tameside Arts and drama therapy practitioner. So, and the rest of the team, which you'll see in a minute, we fight constantly, and we will always do what's best for our clients. We're very passionate and can get quite bullshit as well, which is always a treat. Okay, so we're governed. We're not-for-profit social enterprise company limited by guarantee. We've got a fantastic board of trustees that help guide the organisation. Because we user-led, we also have 9 of our clients with learning disabilities on the board. So we make sure that it's user-led, and we are providing the service that people want. I'm aware I've only got 5 or 6 minutes left. Really, right, I'll give you a tour. Funded, yeah, so Key Fund was our social investor, which enabled us to turn this building. I'm just going to show you some photos of what it was like before. Let's just share screen. Yeah, so it enabled us to put walls in, to put a lift in. I don't know if you can see that.
Yeah, I can see that.
Yeah, so you can see what an absolute mess it was when we took over the building. There we go, dump. And I'll take you on a tour, okay? So we're very proud of this centre, but obviously things are difficult. It's a struggle to get people back out into the community with the fear of COVID. I'm going to turn the laptop round now, so you won't see me, you'll see. I'm currently in our relaxation room. Now just tell me if you can see. Yeah.
Yeah, I can see it probably needs to be a bit lower because I can just mainly see the ceiling and the walls, but as you go.
Okay. We come through here, this is our...
Thank you. So Sam, just remind me, how much money did you borrow from Key Fund?
It's 29. So
£29. Yeah.
of it was a grant to cover the interest.
How much, sorry? 8k.
5,000 to cover the interest.
Okay. So you had a blended finance. So just for everybody on the call, whereas the last one was a secured loan, this is an unsecured loan, and it came alongside some grant, which is where I talked earlier about blended finance, and that just helps the organisation to smooth the cost of the finance. And it's where we often talk about this from other, we go and ask to find match. The difference is it comes from one provider in this as part of, I think it's part of the Access Growth Fund, wasn't it? So okay, lovely.
Oh, sorry, just to note, it was a real easy process. So they guide you through it all. They come to see you, anything that you haven't got in place, they will help you. And I'm still really good contact with Rachel at Key.
Rachel, okay, great.
I ring her up just for advice about anything and everything. So she's become a bit of a mentor for the organisation as well.
Okay, brilliant. So another one we're going to come back to, what makes a social investor social. Thank you so much, Sam. That's the first time I've ever been on a tour during one of these Let's Talk Good Finance, and I loved it. It was absolutely brilliant. It's lovely to see the actual things that the money has been invested into and spent on. So we're going to move swiftly over. Stay there if you can, because I know we'll have some questions. We're going to swiftly move over to our last speaker, who's Mark Dufflin, who's the chair of Walter Raleigh Community Pub and Restaurant. So over to you, Mark.
I can't take you on a tour, but I'll tell you our story. So I'm the chairman of SW. You've got the picture of the pub there, look, and some of our volunteers. I'm chairman of SWR Community Pub Limited. We are a community benefit society, and clearly we manage the Sir Walter Raleigh pub, 16th century building in East Budleigh, which happens to be the birthplace of Sir Walter Raleigh, which is why that's the name of the pub. And we're in the south coast of East Devon. The village has got about 800 odd people, and like many other villages, our pub was struggling, frankly, and on the verge of going out of business. So about, I'd say about 18 months ago, a group of us decided it was time to do something about it. And the pub is now, I'll tell you the story, but right now the pub is owned by 306 shareholders who invested between £100 and £20,000 each. We raised 290,000 in share capital through the village and about 40,000 in loans. I'll explain a little bit more about that because we had a couple of problems when we came to try to claim social investment tax relief and had to detune the number of shares that we could accept versus shares plus loan. So we set a vision for the pub that we wanted the Sir Walter Raleigh to be a thriving community-owned pub, which is a social hub run for the benefit of everyone who lives, works and visits East Budleigh. And back on the 16th of January last year, so early last year, we presented to the village, and you can imagine it was swamped. People were standing outside and looking through windows. It was a big deal for the community. And we basically asked everyone to do three things. First of all, invest in the pub. Secondly, volunteer. And thirdly, spend their money once we got it open, because we need it to be profitable, and we don't need to make too much money, but we need to be profitable enough to pay loans and potentially even investors back. And we asked them to pledge what they would be prepared to do. Benefits we offered to investors were obviously they got the chance to have a great pub in the village and a centre for so much more than that, frankly, which I'll come on to. We did state that we would offer social investment tax relief. So, and I was interested, Mel, to hear that that's changed. I think we maybe got our certificates out at just the right time back in January. Maybe if we'd waited any longer, it would have been too late. But all of our investors have now had 30% of their investment back against their personal tax accounts. And third, so there were two things: great pub, social investment tax relief. And the third thing was potentially, if the pub does really well over a long period of time, then potentially they could get their money back and have a return, which you're allowed to do as a social investment, a community benefit society, sorry. So we had that meeting on the 16th of January, raised the money by the end of February and completed on the sale on the 4th of March. So it was all done within about 6 weeks. Such was the enthusiasm. And we refurbished the pub and opened for business on the 26th of March, so about a year. So we just finished our first year trading, and we run the pub as a pub and cafe. So in the morning it's a community cafe, and in the daytime and evening, obviously it's a pub. We run it in a hybrid model, so we have about 3 paid staff and the rest are volunteers. And our customers are shareholders from the village and externally, and lots of tourists. So our village now, and it's a pretty vibrant village, we now own the pub, the village hall, and the shop, which was set up. All done in similar fashion, some with grants, some with loans, and we also run the church as volunteers as well, pretty much. In terms of legal structure, so we're regulated by the FCA. 1 shareholder, 1 vote, which is really important to us. So even if you've invested 20,000, you don't get any more say than the person who invested £100. We have 6 people on our committee responsible for all the key things that manage the organisation. So accounting, we've got a property expert who runs the property. We've got somebody on communications, marketing, and grant funding. We've got somebody responsible for the community cafe and community outreach, because we make a big effort to bring members of the community in who maybe don't have other places to go. We've got somebody on events, and we've got, because we have to run this as a business, we don't get any external funding. We've got somebody who's a catering and retail consultant who really supports us to make sure that we understand how to manage the business properly, certainly from a catering point of view, because that's really important. So if I come back again to the legal structure and the funding, so 306 shareholders applied for about £350,000 worth of shares. What we hadn't realised when we first set this up was that if you're going to apply for social investment tax relief, it is governed by European law. Based competition law restricts the amount of money that the government can support, can fund, because of state subsidies and competition versus the rest of Europe. And I'm guessing that's now obviously changed, but it meant that we thought we could raise as much capital as we want via shares. Actually, we were limited to 290,000, which is 340,000 euros. So we had to scale back our shareholding to 80% of all of the applications. And so of the 350, we've ended up with about 290 of share capital, 40,000 odd of loans from those shareholders, long-term loans, and 10,000 we had to pay back, because there were some people who preferred to have their money back rather than put it on the long-term loan. So that money was enough for us to buy the building and fixtures and fittings and cash flow. It wasn't enough to fully refurbish the pub and do everything we needed to do to make it the place that was going to bring people in from the community and make it the kind of environment that we really wanted. So we've been working with Plunkett. Plunkett helped us an awful lot in terms of our business plan, our share applications, and they were frankly brilliant, and I'd highly recommend them. I'd say that they owned the project just as much as we did. It was fantastic. And they recommended, we needed more cash, so they recommended co-op and community finance to us. I've just seen Tim down the bottom of my screen just now, so I'm sure he's here somewhere. And we went to them for a loan of 75,000, secured against the building. Okay, so this is a secured loan. What impressed us most, I think, about them was that they got the social element of this. You know, we're all familiar with the high street banks now. You can hardly get to speak to anybody. It's you know, everything's done via algorithms online, and you know, and Tim immediately said, right, I'm going to come down and meet you. He met some of the committee. You know, he understood what we were trying to achieve and could see the environment we were in, and made it really quick for us. It was, you know, really clear about what was required, and within certainly, I'd say even 3 or 4 weeks, it was all agreed, and you know, we were able to move forwards. So we've got a 20-year loan with them. I think it's 3% over base. Tim will probably correct me, with a minimum of 5%. So we thought that was very fair, and that all went very smoothly. And we refurbished the pub, got it moving, and I don't know if I said this to you so far, but in our first year, we've turned over. We thought we'd turn over about 240 odd thousand. We've actually turned over 327,000. So the plan has been blown by miles in terms of revenue and usage. So part of the plan was also, there's phase 2 of our funding story. Part of the plan was also to refurbish a flat, which is above the property. And about 6 months in, we realized that that was going to be a stretch for our finances, partly because the pub, you know, is tough, frankly. For the business model is tough for pubs. You all know the number of pubs closing all over the country. And it's not significantly different for us, despite the fact that we use lots of volunteers. You know, our utility costs are about 4 times higher than we expected them to be. With government help, they're about 3 times higher. And staff costs in hospitality absolutely spiked after the pandemic. So our overheads are much higher than we'd expected. So suddenly we're in a position where we were a bit nervous about investing all of our cash into the flat upstairs, but we realized we needed that income to make sure that the business model was sustainable. So we went back to Tim, and we've agreed, so originally 75,000, we've agreed another 40,000 to refurbish the flat, and as I say, put us on a bit more of a sustainable financial footing with that income. And that was done again within weeks, and we start the refurb on Monday, which is brilliant. Okay, so what's gone well for us? Firstly, I've already said Plunkett were great, a huge amount of support, and continued to be a support. So particularly in terms of the business model. So we've got a bunch of people who are experts in their field, but none of us have run hospitality. So Plunkett have really given us a lot of support on how to on the model and making sure we've got our metrics right. Other things that went well, clearly the village demonstrated that they really care. They're just an enormous support. Up front, lots and lots of volunteers, still lots of volunteers, but one of the learnings is, and I'm sure the other organisations are the same, you do find that eventually it's a few dedicated people who make things happen. And I think we were probably a bit naive that the 50 or 60 people that said they would volunteer up front has now been still lots, but there's a lot of people who do an awful lot of, there's a few people who do an awful lot of the work. So you've got to be prepared for that. Other things that have gone well, obviously, Co-op Unity Finance, easy to deal with. Great understanding of the social and business justification, and quick, which was great. And fundamentally, we've achieved many of the things that we hoped to do. So it's busier than we could have possibly imagined from a pub point of view. There are now people in our village who are great friends who didn't know each other. So the whole community thing has been brilliant, with quiz nights, music nights, events. we're absolute central to the village. So there'd be the coronation coming up, the pub will be a central part of that. The cafe is a genuine community hub, hosting history groups, book clubs, memory cafes. The Women's Institute now meet there, and so on. So it's great. And as I say, the revenue has been better than we could have expected. Learnings. There's a few things that haven't gone quite so well. Some of them relate to the running of a pub rather than the funding of a social venture. So probably not quite as relevant to the group here, but nevertheless been important to us. So first of all, I've already mentioned the issues with social investment tax relief that were created a huge amount of admin and lots more communication with the shareholders than we'd originally expected. So that was a major time issue. Staffing, not easy. When you're working in a community centre where you've got volunteers working alongside paid staff, it's absolutely critical that the paid staff are completely aligned to the community vision and completely aligned to the volunteers, because it's if you get any misalignment there, then it can cause friction. And I've said to you, the financials have been a bit tough. We're now overcoming that, but be naive to think that our original business plan, where we thought we could make money year one, that hasn't happened, and some of the costs involved were significantly higher than we'd realised. And I think the market and the world changed a bit with the pandemic, and then obviously the cost of utility bills. So that was a major headache that we've had to overcome, and we are. So overall, lots of time and energy goes into it. That's a given, and I'm sure everybody on this call will understand that when you commit yourself to these kind of community ventures, it's a big deal. It's a big time commitment, and you should never underestimate that. However, the conclusion so far, and as I say, we're just over a year in, is that we've now got this fantastic community hub. We've engaged many people as volunteers and pub or cafe goers. There are friendships that have been developed that just didn't exist previously, and the whole thing so far is a huge success. And Sir Walter Raleigh's alive and on his next adventure.
That's brilliant. Thank you, Mark. Goodness me. So I need coffee and rugby. Then I basically need to come and to see Sam, because you've got community cafe as well, and I could have a real go at those drums, I have to say. And then I need to get down to East Devon. So there we are. That's going to be my summer, I think, really, because it looks amazing. Just wanted to say thank you to all of the speakers. But what I'm hoping we're going to do now is we're going to have some time for questions, and there were quite a lot of takeaways, so I'll try and summarise some of those at the end. But before I do that, just for everybody else's benefit that's on the call, just as a quick roundup, I thought I would just try and summarise all the different ways that these organisations have shared today that they've raised investment. If you remember right back at the beginning when I was trying to tell you what social investment is and isn't. So in this mix, we have debt, so a loan, which is secured, which has been used in two ways: for refurbishment with the Sir Walter Raleigh, and for purchase of the freehold for Hill Street. And then we also have an unsecured loan, which has been blended alongside grant, which has been used for refurbishment. So different types of finance, but there's some crossover in the purpose. We have equity, which are community shares, which have been used for purchasing an asset but which wouldn't have been secured on the asset. And alongside that, we have unsecured loans, which have been used to purchase an asset. So I think just in that particular way, you can see that you've got both investment from individuals through community shares and some of the loans for the pub, and you've got organisational investment through Charity Bank and through Key Fund and through cooperative and community finance. So here we are with 3 organisations, all doing fantastic things, braced around the UK with different communities who've all managed to use social investment in a slightly different way to help them try and achieve whatever their social purpose is. And I'm going to come back to that one because I often get asked, is it worth it? Tell me, Mel, is taking on investment worth it? I think you've actually done that really well for me by explaining your stories, but I will come back and tell you what my reflection is when social enterprises and charities ask me that question. But for now, excuse me, I'm going to speak. Sorry, I still felt that coming on. I have one question ready so far, but I'm hoping that the audience will help me out. It usually takes a little while to get going, but then usually questions come flooding in. I've got a question from Patricia, and this is for you, Mark, and it's about, she's asked a question, do the same 6 people overseeing the pub also oversee the cafe, church and post office? And if so, what do you do to mitigate against conflicts of interest? So I'm going to ask you that question, and then I'm going to sort of expand that a little bit around how a community benefit society works, because you talked about everybody only having one share and having the same thing, but then you talk about the management committee. So yeah, can you just answer that for us?
Okay, so we've been quite, I think, between the various groups, quite cute. So the answer is, it's not the same people doing all every organisation. However, the person on our committee who looks after events and community liaison is also on the village hall committee, and for some time, he's not on our committee anymore, but the person who helped kick off our organisation at the start is also the chairman of the shop committee. So there was an awful lot of and the person who's responsible for community outreach on our committee is also on the church committee. So there is crossover and links. We've also got somebody who represents us on the local parish council. So there are crossovers, but not everybody's burdened with everything, so it's quite clear demarcation. Conflict of interest, not really. I mean, we're all in the same community and everybody just works together. There is talk of potentially expanding the shop and the village hall to take in a meeting room area that could have a cafe, which you could argue might end up being a problem between the 2 organisations, but the truth is we'll all sit down and we'll work out what's best. It's a pretty close-knit community. It's probably easier for us. There are 800 people odd in a little village in East Devon. I gather if I'm more urban areas, it might not be quite as easy to manage that conflict.
Interesting, Mark, you say that. I live in a small village of around 80 houses. I'm not sure trying to get everybody to agree on one thing would be quite as easy, but usually it is the conflict of interest and who owns what in terms of land that is the difficult thing. But I think what's really interesting, again, I was reflecting on the 3 different organisations we've heard from. So you've got a mixture here of contract delivery for Sam's organisation, and contract and hire for Stephen's organisation, and then retail sales and potentially rent coming forward for Mark's organisation. So again, right back at the beginning, I said that it's quite usual for people to have mixed income coming from different places. Sam, with your community cafe, is that open to the public as well? Yeah. Okay. So as well as your clients, you've also got retail income that can come through.
And what we want to do is now we can put some like community events on where the cafe would host events. So that's always been the ideal.
Okay, and Louise has asked a question to all of you. Do all three organisations own the venues they occupy? So I think, Stephen, we now know that you do.
We on a 5 to 10 year lease, so we're on year 4.
Okay, so that would make sense why your loan would be unsecured rather than a secured loan over 25 years. So because that's why I'm sure.
So if we finish this lease, we need to return it to its original state, which, if you recall the photographs earlier, that would be an interesting project.
Yeah.
Turn it into a dump again. So yeah, that's something that we're speaking to the landlord about. Because obviously we've installed the lift, and we'd have to take the lift away and sell it, and the logistics. Yeah. So watch this space.
Okay, so that's quite a common story, that many organisations who will do that will go on to look to try and actually acquire the property in the longer term. So yeah, that's really interesting. There's also a real mixture, wasn't there, between it takes a long time. So actually, it was great to hear a couple of you saying how quickly social investors were able to respond and react. I think that does depend. Usually, and I'm going to come back to, I keep saying I'm going to come back to it, but at the end, I have a little 7 lessons learned, which is all the things that hear from peer speakers like yourselves have shared with our audiences over time. And one of the top tips they tend to give to other people attending are, it always takes longer than you think. So however long you think it's going to take, add a bit more time on, because usually something will go wrong. But there's also been some really positive stories in here as well. Do I have any other questions from the audience? I noticed, Moisin, I know you were looking at this chain of urban vertical farming and building community hubs for education and training with a housing first solution. So there are quite a lot of housing first examples. And as I say, we have Urban Farm. That's a really good example of that particular type of investment. I will put that out to the panelists. But I'll just pick up on some of the other questions while I can do that, in case there's anything specific you have. So John, you've got a question for Stephen. How do you maintain resilience when you're overcoming challenges such as 7 legal titles? That is the most complicated I've heard, I have to say. No access to high street bank finance and overage agreements. And yeah, this is a good question. I was going to ask you similarly about all of your trustee boards. How do you lean on other board members or others for support? I'm sure this would be quite a common topic out there. Now, how do you find really good trustees and board members?
It is becoming a greater problem. Ian Bentlett is with me today on this event. He tried to get away by moving down to Devon, but we still kept him on because he had a key role. But I think, as was said before by Mark, you start with a lot of people, and you end up with a few doing most of the work. And it's getting more and more difficult to get new trustees on board, particularly that represent a whole range within the community. It's not that there's a lot of time that's needed. I mean, we have a meeting every month, but in the meantime, people have specific tasks to do, like the HR issue, like fundraising, so many different aspects that need to be dealt with. And it's getting hard. I think Ian Bentley would like to say a word if he could be unmuted, because he's at the front end. Can you unmute him?
Yeah.
Ian,
you can come and unmute yourself. And here he is. Just need to take yourself off mute.
I think one of our, sorry, Karen.
Yeah, fine. Can you hear me?
Yeah. Yes, we can hear you.
No, just to reinforce everything Stephen said, I think Stephen knows the answer. Yes, trustees are difficult to get, but we have trustees which are all interested, and we don't have any people that sit back and don't necessarily do a great deal. And we also have a good selection. One of the questions there was about the overage deed. And yes, that was an awful lot of hassle, but we're fortunate enough to have people on board, our trustees, that have a very mixed but professional service background. And I think if you have a a board such as we have, it's whilst it has its challenges, having meetings every month as opposed to every 3 months, making sure the board is always up to date with what's going on, which Stephen does excellently, by the way, and tightly controlling the finances does make all the difference, both to obtaining the funding and also the way the board works together.
I think one of the important issues in talking about resilience is to get the right mix of fundraising in terms of grants, which are for specific commissioned services and projects, and just general overhead and salary financing. And we've been lucky with the lottery, have actually helped fund our salaries now for about 5 years, I think it is. And is that an unrestricted funding for overheads, particularly with increased costs, that is important. So, you know, we're always looking at how can we raise more money, not just for services.
Yeah, because this all comes down to the resilience of your organisation, doesn't it, and sustainability. And I think the thing that you've all demonstrated so well is this sort of enterprising mindset of being able to use enterprise. And do you remember I said that I come back to this, is it worth it question, which I get asked all the time. You know, if you reflect on the things you've said about the time it takes and the hassle, or even when it's a great partnership, you know, the only people who can actually answer that question, is it worth it, is the trustees or the directors of the organisation. So if you think of social investment as another tool in your toolbox, if that helps you to sustain or to create or to scale new impact for whoever your clients are, then you'll get to that answer of whether it's worth it. But having a really engaged board, probably having a smaller number of really engaged people is probably as beneficial as having lots of people who haven't got lots of time or to stay close to the details. But also being able to refresh that board over time, because people's priorities change. Although Ian, I can see you've not managed to, even though you've tried moving away, you haven't managed to leave. So that's always good. I was just actually thinking before, you need to just check, Mark, is he too far away from you? Can you grab him?
I'm not sure where you are in Devon, Ian.
Sorry, I'm trying to.
I've already said to you, Mark, I'm going to pop up and see you. We're down at Ashbrington.
Okay.
Oh, okay. Yeah, definitely.
Right. So I have a really great question here from Sean. Sean, I don't know whether you're happy to do this. You've posted it in the chat, but I have a particular reason for asking this. Are you happy to come in off mute and ask a question and tell us why you want to know? Because this is a good one. If we don't get it asked, I always bring it up. So give you a second. Sean, you happy to come in, or do you want me to just pick it up from the chat?
I can try to. I don't know if you can hear me all right.
Yeah, I can hear you.
Yeah, so I suppose coming from a public sector side of things, because I'm in a town council. I work for a unitary council, so
yeah,
the district. But I've also got an interest in trying to save a it's called the Rushton Ritz. It's the it basically was a bingo hall, but previously it was a theatre, and I'm part of a group trying to put together the funding to buy the building and turn it into a community asset. So
okay.
That's on when I'm looking at this. But from the public works loan board side of things, so my two council ones, that's a relatively low interest rate compared to normal.
Okay.
So okay. Interest rate you're talking about for this would be slightly higher, or whether it's something we could use as kind of a complementary bit to that lending.
Okay, so great question. Thank you for asking it. So let me start with what usually happens. So what usually happens is when I'm talking to people, they'll say, oh yes, but the problem is the social investment is too expensive. And I usually ask people, well, what do you mean by too expensive? And one of the challenges we have is that people often try and compare apples with pears. So they might talk about the bank rate, the base lending rate, and they might talk about a secured loan, when actually that's maybe not the type of money that they can take. And so this goes back to my original piece in my slides. I was talking about you need to understand where the money comes from as to how much risk an organisation can take. And therefore, it's really difficult to ask and answer that question as to what the cost of capital or finance is, because it varies by product and it varies by lender. But usually you would find that secured lending, which is generally perceived to be the lowest form of risk lending, is usually on the lowest form of cost. However, there has been a real challenge to that in our current base rate situation, because as both Mark and Stephen have discussed, most of the social banks, so Charity Bank, Triodos, Ecology Building Society, Unity Trust Bank, usually structure their loans as base rate plus a variable amount, so an amount over base. Now the problem is that base has been the piece that has been growing. So to some extent, what has always been the least costly form of borrowing there's been a narrowed gap, I suppose, between the unsecured lending, which has tended to be higher. However, in both cases, you can obviously negotiate with your investor, either for a fixed deal or a flexible deal, but also it's in your investor's best interest to ensure that whatever is put into your cash flow forecast, that you can afford those repayments, okay? Because no social investor, I can tell you this, hand on heart, will lend you the money if they think that's the wrong thing to do and you can't sustain it. Why would they do that? They want to help you create and support the impact. So that's where your interest starts. Then you move into what we would say is blended finance, which tends to be a combination. So it's some unsecured lending, debt, and some grants. Now, what many people do, and Sam, you talked about this as offsetting the cost of the interest, is it becomes like a compound rate. So that's not how it would be expressed. It would probably be expressed as £5,000 worth of grant, which is non-repayable, and £25,000 worth of unsecured lending at 8%. But what many people do is put those two things together to come up with a compound amount. And that's what it's really costing me if I borrow 29,000 or 30,000 over the period of the loan. And then you get other types of lending, which could be revenue participation, which is where essentially it's longer term and patient lending, and often allows you to generate an income before you have to start making repayments, but then generates sort of profit share period, usually capped so that it's not taking all of the profit out of the organization, but shares the upside on lending with the investor. And it's why that's a really difficult question to answer. Thanks, Tim, for sharing that. That's really interesting. But essentially, you can borrow or have been able to borrow anywhere between, previous to the base rate moving. In the past, you've been able to borrow anywhere from 2% to around about 14%. And it just depends on the level of risk that the investor is taking, where their money comes from, how long they're lending it over, and what sort of product, whether there's any kind of security. Because obviously with security, if things goes wrong, there's an asset that can usually be sold to repay the loan. But it's a really good question to ask. How much does it cost? There's some great resources on Good Finance. So if you want to do some cost of capital calculations, if I borrow X amount of money at this rate over this time, how much would those repayments look like? And the other thing that you can build in, and many investors will look at with you, are things like potentially capital repayment holidays to allow you to generate income, or patient capital that doesn't have to be repaid and has repaid at a higher rate in the last sort of period of its repayment. So I would say that, as Tim has put here, that unsecured lending can be found somewhere between 6 and 8%, but you always need to ask that question: how much is it going to cost me to borrow it? Okay, and shop around, because there tend to be a range of different investors. But I think finding the right partner for your investment is the absolute key to this, and you've all talked about relationship is. Okay, yeah, John's talking about negotiating that. Is somebody wanted to come in and ask a question? Okay, that's fine. Yes, so I think again, I get asked this question around how flexible can a social investor be? Well, usually it's about each social investment deal is pretty bespoke to the business model and the organization they're trying to support. And so there's often a lot of flexibility to be done in the deal. That's very much for you to try and talk to your investment manager about, to see what suits your organization best, because everybody wants the capital to be deployed to make it work, and that has to work around whatever your business model is going to be. Okay.
Can I just jump in?
Yeah, go on, Sam, because I've got another.
So that during the height of COVID, we went to interest-only payments. So that's a real, you know, possibility, and therefore extended the length of the loan. So they are really understanding and flexible.
Great point, Sam. I'd written down the fact that essentially it's never going to all be plain sailing. You're going to have to expect bumps and barriers in the road, and that social investors expect that. I think I'd probably get fair nods from Tim and John at least. How many deals have you had, Tim or John, that have gone smooth, plain sailing, no amendments? Is it majority or minority?
Is that from a kind of credit decisioning perspective, or is it from more of a kind of sort of the kind of legal structure and kind of maybe the potential purchase that the organisations are doing?
More from when you've made the decision to invest and you've got the business plan, and then maybe the income doesn't come quite like the business plan was expected.
I think that's probably 80 to 85% of the time. I think the benefit is that social investors are more experienced at doing that. We're less likely to throw our hands up and go, no, we don't understand your legal structure, or you're a charity, you know, you're not for profits, you're making surpluses, what does this all mean? And I think we're less worried by that, and we'll work it through with our organisations. I think that's really important. Ultimately, we like the impact that the organisations we support deliver, and that's kind of what drives us. So yeah, I think there's always a lot of shaping. Sometimes we discover things with legal structure or legal title that we help sort out as part of the process as well. I think that's really important, so that the organisations are in a really good position to kind of move forward.
Great. Okay, thank you, John. Tim?
Yeah, I mean, I think I'd echo that. I mean, I think it's, you know, it is flexibility that that, you know, we offer as social investors that is, you know, that is very different from the mainstream. And I think it's important to say that, you know, we become partners with our borrowers. In actual fact, I mean, in our organisation, because we're a co-op, they become members. They become members of our cooperative. So you know, it's important to us to maintain relationships, and you know, and that's really important, because we want, you know, if anything happens, you know, when things start to become unstuck or things get a bit bumpy, you know, we want them to be the first person they pick the phone up to, rather than burying their head in the sand, because, you know, we can always do something about it if somebody talks to us. What we hate the most is when people, you know, don't do that and sort of, you know, try and cope, where we could have, you know, helped smooth that transition for a while.
Lovely, thank you, Tim. Yeah, even as and Mark did this perfectly, even if that means potentially lending more money, actually it's quite common for social enterprises and charities to try and borrow the minimum that they think that they need, and usually that isn't perhaps going to be what is needed, because we do have rising costs. So often there's flexibility there. So thank you both for that. Got two really great questions I want to just try and use to round this session up. So I'm going to tell you the last question I'm coming to, because I'm going to ask you all this. That gives you a little bit of notice. So this one's from Lorraine at the National Community Lotteries Fund, and she's asking you all to think about, is there anything you wish you'd known at the start of the process which would have helped if you had have known it? And is there anything you would do differently if you'd have had the opportunity to do it at the beginning? So I'm going to come back to you with that as the last thing. But Hannah has asked, and this is for any of you again to answer, are there any unique challenges or barriers you feel community organisations face when taking on social investment? So I suppose there's a slight nuance here that many organisations work within their community, work with different clients, but may not actually define themselves as a community organisation. You might have a KIC, for instance, limited by guarantee, that maybe just has 2 directors and perhaps doesn't see itself as being a community organisation, although that's not necessarily the case. They may well do that. So are there any unique challenges or barriers you feel community organisations face when they're taking on social investment? Stephen, anything you think that's unique?
I think what we didn't anticipate when we started the process to buy the property in May 2019 was that in December 2019 we'd be hit by the pandemic, and that naturally slowed down the process and increased the costs. and actually started to have to reevaluate what our business plan was going to be, not knowing how long we'd be there for. I think we've learned a lot of lessons, and if we had to go through the process now, I think we would do some things differently. But I think we just hung in there and got the job done.
Okay.
Coped.
Perseverance. I think that's
Yeah.
definitely your motto. Okay,
Yeah.
great. Mark, what about you?
Yeah, I
So
think
or anything you wish you'd known?
I think the truth is, I think we were relatively well prepared by engaging Plunkett as much as we did, the any lack of knowledge was probably more related to how do you run a pub rather than necessarily how do you run a social enterprise or a community enterprise. It was more about the business model,
Okay.
and I think you're right. The world did change a bit. We set up just after the pandemic, but that definitely changed the economics. I think we were relatively well prepared because of our association with Plunkett.
Yeah, I mean, and I think so. There's a bit about partnership and support and finding the right partner to work with. There's also the piece about actually there's a really good lesson there in the things you should know. We have a great case study on one of our Get Informed Social Investment for Boards about a charity that started a translation service, and that actually it failed. And the reason they said it failed was not because it took investment on, but because they failed to understand that in running that business, they needed to be in sales. And they thought that people who'd worked in the charity, who'd worked, with clients could do that role, but actually it was too much of a skill set change. And that's what the business model needed. It needed salespeople, essentially, who could really understand and felt comfortable with doing that. Not to the extent of selling it when somebody didn't need it, but there was a key step change. So there is definitely something about really understanding your business model. And something that I have learned whilst I'm working in social investment is that being a social enterprise or charity, we all create impact, but we don't have a right to be here because we do good things. Okay, so if we use enterprise as a way to do that, that's something we can control. Whereas it's great if we are successful at grants, and brilliant to hear some stories, and it's essential in the mix. But you are then managing on the basis of being able to get hold of that money rather than being able to generate your own income. So having that.
You make a point about grants. One thing we hadn't realised was we thought that an organisation like ours would get access to some grants, and that's actually been pretty tough for us because we're not like the other organisations here. We're basically a commercial enterprise that is part of a community, and the kinds of I don't think we qualify for lottery funding, for instance. Other local grants that might have been available to us, they focus more heavily on education. So suddenly we realised that actually the grants that we had expected to be able to tap into aren't as easy as we thought.
That's again can be around why social investment can essentially be more flexible. Sam, let me come to you for that last. Anything you wish you'd known, anything you do differently?
Yeah, so I think the biggest thing I'm sort of learning from this is the fact that we're user-led. Obviously, our committee, the majority of people with learning disabilities, a lot of information, grant information out there isn't accessible. The application forms aren't accessible. The translation that we have to do to help our board understand where we're at as a business puts a lot more responsibility on our trustees and myself. So, hearing that other people have got 60 volunteers, I'm like, I'm well gel. Yes, I think the other thing as well that I wish I'd known before we put in is to have the confidence. So I just remember it being really scary the first couple of meetings we had, thinking, I don't speak this lingo, I don't understand these terms. We're a community arts centre. So I think if people understand that you don't have to speak a certain language when it comes to key fund especially. Yeah.
Brilliant. So, and I would say that for all social investors. And if you get stuck, check out our jargon buster, because I came from working in retail fashion and then running a social enterprise, and I still daily get bamboozled with terms where I think somebody put the NAV the other day, and I was like, I don't know what that means. Tell me what that means. So yeah, don't be afraid to ask questions. There are no daft questions. If you're thinking it, somebody else, and social investors will help you out. They understand that this is just you remember what I said, it's just a tool in the toolbox to help you create impact. I just wanted to say a huge thank you to Mark, to Stephen, and to Sam. First tour I've ever been in, coffees and lunch coming as I tour around the country. We're going to just finalise and finish up with a few more case studies and then just these 7 lessons learned. But thanks so much for your time. It's been really insightful. I hope everybody's really enjoyed hearing from you. Right, Olivia, I've just got less than 10 minutes to summarise this. So I'm going to try and do that. I'm just going to talk about, I'm not going to necessarily go through the details. We will share the slides afterwards. But I suppose I just wanted to make the point that there are a range of different community-based organisations that don't all look and feel the same. This one here is an investment in Liverpool. Actually, we're going to visit there next week. It must be something to do with the social enterprise pies, but this is a bakery just outside of Anfield. And this enabled them to actually purchase that bakery and save it from local demolition. So here's another way that you can have a community-based organisation who's used investment. We move on to the next one. Another key fund example. So this again is an interesting one because this is a housing-based model. So I was thinking particularly for Moisin, this might be interesting, but this is actually not a secured loan to help them buy property. It was a cash flow, an unsecured loan to help them smooth the delays in housing benefit payments from the local council to ensure that they could continue to service their customers. So again, I suppose this again is just a £20,000 investment. We talked about, didn't we, looking at the difference. We've we have talked about sums from 600,000 to 125,000, taking investment to almost 300,000 for the pub, and then to 30,000 for Sam's organisation. So here we said we would bust that myth. Thought I would come to Wellington Orbit because this is a really good example. This is another community arts-based organisation. It has community cinema. I've been to this one, tasted their coffee in their community cafe. This is in Wellington, not far from Telford. And they've used just about every type of investments. So they've done community shares. They've just now purchased the building with a secured loan. They have unsecured loans from residents. And this has been a different stage of development over time. But without a doubt, they have really used different forms of investment. I have a couple of questions around social investment tax relief. I haven't really got time to go into those today, but unfortunately, the tax relief has been ended, so it's no longer available, and the only forms of tax relief that are available are seed enterprise investment fund or enterprise investment fund. Those other forms, we have some documents around how you might use those, but they are problematic for organisations using community shares. And this one is Sutton Community Farms, so you can get community land trusts, community farms, community-led housing, community pubs, community sports clubs. We haven't gone over many of those. We're going to be running a Let's Talk Good Finance later in the summer that's all around sports and physical activity. So there are a whole range of ways that you can use social investor. And this was a crowdfunding based, put on a crowdfunding platform and involved community shares as well. Okay, so I'm going to go back to those 7 lessons learned that I said, and these are the things. Most of our speakers have talked about these things, but I thought I would just round up with them. So number 1, remember what we said, social investment is not benevolent money. You do have to pay it back, usually with interest. So making sure that you have a business plan and enterprise in activity that's going to generate a surplus of profit to be able to do that is going to be a core part of exploring social investment. Number 2, impact matters. So what defines a social investor, what makes a social investor social, is that they care about the difference that your money is going to make. And actually, Tim had put in the chat really good point. One of the other things that makes a social investor different to a mainstream investor, it is very rare very rare for a social investor to take a personal guarantee. So you're not asking a trustee or a director to put their own home at risk. They understand it's for a social purpose. And again, that can often set the social investor apart from mainstream lender, and also about the flexibility that they will take when things get difficult. It's about much more than the money. That partnership, Sam, you talked about your relationship with Rachel, who I know well. We talked about Danny and his Kate, and we talked about Plunkett and their support. In all of these cases, you can see that it's not just a straightforward tick box exercise like you might do where the bank says yes or no. This is about a relationship or a partnership. And don't forget that you are going to borrow money sometimes over 20 years or 7 years or whatever it happens to be. So, you know, it's important, I think, to establish a partnership or a relationship with your investor, find the right one. The quote that I often use is from a social enterprise in Birmingham, who when he talked about his journey through talking to lots of different social investors, his quote was, "I had to kiss an awful lot of social investment frogs before I found my social investment prince." Now, that's not to say that any social investor is a frog. I think what he was trying to say is finding the right match for the type of money that you want to borrow is really important. So you need to put some time and effort into that. Tim's point, honesty is always the best policy. If it goes wrong or it doesn't go according to plan, don't forget that John said that's around 80+% of the deals that they do. Do not stick your head in the sand or avoid the call. I don't want to tell them I'm out, tell them at a meeting because I can't make my repayment this month. Get on the phone and talk to your social investor about what the challenges you're facing are. Work with them as a partnership, so that I have known social investors to go into contract negotiations, lend more money, suspend repayments, so give capital repayment holidays, help with fees, help with governance issues, help with recruiting trustees, a whole manner of things. So if you're struggling, get in touch and chat to them. Why isn't it cheaper if it's social? Thank you, Sean. We had a really good discussion around what the cost of capital is, why it costs what it costs, where the money comes from, and the different types of products and what the range of cost of lending would be. And I usually say to people, if you think you can get it at a more cost-effective price from another lender on the high street, then why wouldn't you consider that? We are not going to tell you taking mainstream money is bad. It might be more suitable if you have a relationship with your mainstream bank and they will lend you money. That might be the right thing to do. You have to offset that against perhaps the flexibility and the understanding of your business model. And I've known some of the larger deals, I've known people to take money from their mainstream bank and a social investor so that they've got some from each, so they feel they've got the best match. Due diligence isn't fun, but it does make your business better. We didn't actually cover this one. This was probably the first one we didn't cover. Due diligence is the process of which social investors are getting comfortable with whether lending to you is the right thing to do. They will want to talk about the people, your trustees, what you want to do with money, the impact that you're going to create. Again, different investors do due diligence in different ways. For many of them, it will be coming to visit you and having a chat first of all, talking through your business plan. That is not like The Apprentice. It's not a 20-page shiny booklet that you're going to get hold up on the end. They just want to understand more about your business model. But due diligence does take time. It is important as a social investor make sure that lending you money is the right thing to do. And lastly, it always takes longer than you think. Now, we had some great examples. I don't often have that of where social investors have really been fleet of foot or been able to be that fleet of foot. I think usually it's down to social investors can be really responsive. It depends on how long it takes for you to get the information back to them. And there is obviously always a capacity issue at your end if you're trying to run your business as well as service the questions that you're being asked. And the last thing I would say is if you're being asked a question and you don't know the answer, first of all, say you don't know the answer or ask why that information is needed, because sometimes we are trying to find out the answer to a question. We might not be able to give an assurity on the answer. Those, I think it's important for me to say, those are not my lessons, okay? They are the lessons from people like Stephen and from Mark and from Sam, who always are here from peer speakers, the people who are able to share the warts and all journey to social investment. I hope the day's been useful. Olivia, do you have the last Menti to put back up in the poll? We're just going to post a last Mentimeter link into the chat for you. And I'm hoping that you'll just go back to that now and just indicate where you think your knowledge of social investment is now. So it's just been posted into the chat. if you click on that for me, and we'll see where we're at. I'm hoping that this afternoon has been interesting. Oh, Joe says so that's good. I hope that we've given you some real life examples, and I hope we've got answers to some of the questions. Now, Good Finance is always here, as is Plunkett, as are the investors. You can find a list of all the investors on our investor directory, which I'm sure one of the team will post into the chat, so you can find out who the investors are. You know, we also have a series of podcasts, other case studies, and we record these sessions so that if you ever want to go back and share this with somebody who wasn't able to attend today, you're able to do that. But we've gone from around about 5.3, I think, where we were. Karina will save the chat as well so that you can get access to it if you need to. But we've managed to, just in a couple of hours this afternoon, move our collective knowledge along from sort of midpoint to set about 75%, so 7.5% out of 10. So I hope that you feel that that was a good use of your time this afternoon, and we look forward to seeing you at another Let's Talk Good Finance soon. We have one coming up on energy resilience in June, and then we're going to be following that with one around sports and physical activity. Thanks for joining us. Thanks so much again to the panel, and we look forward to seeing you soon.